Asia markets are rising today as investors assess a slew of mixed corporate earnings. Southeast Asia's largest bank, DBS Group, reported a 2% year-over-year increase in fourth quarter net profit of $2.39 billion. China's biggest chipmaker, SMIC, though, made clear that persistent macroeconomic headwinds and geopolitical tensions could impact the business in 2024, only a day after it posted a 54.7% drop in fourth quarter profits. Stocks continue rising, though, after China's efforts to bolster its market. Susanna Streeter is head of money and markets at Hargreaves Lansdown. She has more on the stimulus measures put in place by Beijing to help pick up its economy. Take a listen.
There's been a variety of measures. So regulators have imposed fresh curbs on short selling, and also state investors said they were expanding their stock buying. So, for example, a sovereign fund buying more ETFs, exchange traded funds, to support the markets. But also there was quite a surprise cut to the amount of cash that banks have to keep on hold in reserve as a kind of capital buffer. And this is to try and help boost lending, both to households, but also to companies as well. Because, of course, what's been dragging down the stock market is real concerns about China's overall economy, with the fragile property market really denting wealth perceptions among many consumers, making them more cautious, so they're spending less. And meanwhile, companies have also been hit by lower demand from overseas because of high interest rates in other countries around the world and more difficult economic conditions. And this is all really conspired against China's economy. And certainly with the economy still grappling with this property house of cards, there are no easy solutions. It's why there are wide expectations that interest rates will be cut this quarter. And in fact, that surprise cut to the amount that banks had to be kept on hold, well, that was brought forward. It was expected later in the year. So there are a variety of stimulus measures. But remember, of course, the Chinese stock markets have been on a roller coaster ride. So although we've seen this recovery, given that they've hit 5-year lows recently, it's a bit of a drop in the ocean.
Right, and on the point you just made about the various concerns there are now on the Chinese economy, right? The SMIC said persistent global macroeconomic headwinds and geopolitical tensions could impact the business in 2024. What sort of disruptions are they referring to, as we saw many sectors teetering, first of which the property sector?
Well, of course, I think they're referring to the fact that Chinese companies have been struggling to navigate much tighter export controls that the US has imposed on advanced chip makers and the equipment used to make them. And so SMIC was one of those placed on the US trade entity blacklist in 2020, which of course has meant that it's had to obtain these licenses, and they're pretty hard to obtain if it wants these US companies, if they want to sell their technology to Chinese companies. And so I think that is one of the global headwinds it's referring to. And as a result of that, there has been effort to kind of rejig supply chains, and that is partly leading to a glut in the market, whereas, of course, during the pandemic, there's a real shortage of chips. But now all of these headwinds are conspiring to cause this kind of glut of semiconductors in the market. And I think that's weighing on the company as well.
And now let's go to other top stories from around the world. Germany's industrial production has slumped more than expected in December, marking the 7th monthly decline in a row. Output decreased 1.6% compared with the previous month, mainly driven by a sharp decline in car-making sector. Manufacturers in Europe's largest economy has been hit particularly hard by higher energy prices and rising interest rates. Walt Disney, ESPN, Fox and Warner Brothers Discovery have joined forces to launch a joint sports streaming service. The platform has no name or price, but the three companies will each own a 1/3 stake. The company's long-term goal is to make the platform a home base for sports programming. The agreement comes after Amazon decided to take a stake in US Diamond Sports Group to expand its sports services. And US automaker Ford tops earnings expectations in the fourth quarter of 2023 and forecast higher profits in 2024. The automaker expects earnings of $10 billion to $12 billion compared with $10.4 billion reported in 2023. Ford also reports adjusted earnings per share of 29 cents for the fourth quarter. Meanwhile, Ford's Model E unit, involving its electric vehicle products, post a full-year loss of $4.7 billion before interest and taxes.